It's time to do business again on Business Incorporated. We have 25 minutes to give you updates from the world of business. And here's what we have prepared for you. The 15% fuel import tariff that's approved by President Bola Tinubu will still make it the news. We'll talk about that, how it affects supply and prices. Some good news coming the way of Nigeria as the price of chicken has declined 5.5%. Going to be a good Christmas. More money coming through the startups. African startups raised over $442 million in the month of October alone. You're welcome to the program. I'm Ini John Mekwa. Let's start from what's happening in the metal space. Gold traded below $4,000 per ounce mark again on Tuesday as the dollar remained resilient at an over 3-month highs, while reduced chances of another U.S. interest rate cut in December and easing U.S.-China trade tensions that has blunted billions demand. So look at the numbers for this afternoon. Spot gold is on the flip side of what we had at this time yesterday. It's down 0.2%. The price has gone below that 4,000 mark, which was a record high that we hit about a month ago. It's now $3,992.23. U.S. gold is also down 0.3%, $4,001. That's 40 cents. Spot silver still managing to hold on to the color of green, is 0.1% up at $48.12. Platinum is 0.1% in the green also, $1,566.60. Palladium, however, joins the others in the red zone, 0.1% at $1,430.31 per ounce. And moving to the oil space, prices watched just a little change early on Tuesday as markets weighed OPEC Plus' decision to pause output hikes in the first quarter, even as concerns over a looming supply glut persisted. On Sunday, the Organization of Petroleum Exporting Countries and other allies, they are called OPEC Plus, they agreed to a small oil output increase for December and a pause in increases in the first quarter of next year. So look at the numbers for this afternoon. It's in the red, but I mean, reports say the Bonny Lights, which is the crude for Nigeria, that's hitting about $78. That's a report saying now. But Brent at this time is $64.07 a barrel after a lost 1.27%. While WTI lost 1.38% to settle at $60.21 per ounce. Of course, apart from OPEC Plus, the calm between the United States and China is also feeding into this, and market participants, they're still waiting for the latest U.S. inventory data from the American Petroleum Institute. That's due later on today. That will give more trading cues. And also there are some U.S. oil stockpiles that's expected to rise for last week. That's the forecast, but we'll see which way it goes. And talking about oil now, let's come to Nigeria, where that 15% duty approved by the president, that is still keeping conversations going on in that sector. Petroleum marketers, they've warned that the pump price of premium motor spirit, that's petrol, could exceed 1,000 naira for a litre following that approval by President Bola Tinubu. There's also the other side of the divide, protecting local refineries and refiners. That's actually the reason given for that tariff. But let's find out what Professor Kenneth Ife has to say about this. He's a development economist and joins us right here in the studio. Prof, good afternoon and welcome to the program.
Thank you for having me.
Good to have you. So, I mean, a lot of talks, pros and cons of this 15% import duty. What are your thoughts?
This is, as far as I'm concerned, from the genesis of this administration, this is the most consequential, most effective use of fiscal instrument to achieve multiple objectives. One is going to address the fraud and all the corruption we have in oil fuel import. I will explain. Two is going to protect local refining capacities in accordance with the PIA 2021. Three is going to protect 230 million Nigerians and the 42 million MSMEs, their interest in these products. Then it's going to encourage and really open the door for international investors. Because why do you have 30 licenses for refineries and only 3 are trying to start? They are being held back by the asymmetries and misalignments in this particular subsector. That is the fuel import and the logistics and distribution subsector. So I can break it down. One, everybody knows what the shenanigans going on in fuel import. When EFCC went to investigate, some of them admitted that they will send in 30 million liter tanker. They will remove 10 million and they record 30. They go to Lome and come back, discharge 10 million, they record 30. The third time they will record 90 million liter against 30 million liter tanker. Come and do it now. Because when you discharge, you get 15%. You discharge again, you get it. So by the time you go away, you will pay 45% duty. So that is dead on arrival. And there are many more of these that are actually, okay, one, we expect NMDPRA. The 3 things that they should have done immediately they come in is to establish the correct quantity of fuel being consumed in this country. They have not done that. And even as Dangote is rolling out 10,000 trunkers where you could put satellite tracker and geofencing, so you can actually say exactly what is consumed where you go near the border, alarm will go. They don't want to use that. And they haven't got any metrics that can actually tell us what we are consuming. So what you hear is, today is 50, 70, 80, we don't know. So it is about projected consumption. So that's number one. Number 2 is to actually have a laboratory of international standards to actually measure the parameters when the fuel comes in. Because according to the PIA, as at the right time when they decide that we need to import, all the stakeholders will come and then they will check. We haven't got it. Neither NNPC nor them have an international laboratory that meets the ASI convention. So they haven't. So you can't fulfill that component of the PIA. So, and other things. So we need to see what this, so that stops corruption. Then how does it protect consumers? Well, Dangote has said, we guarantee the price. Till after Christmas, they guarantee the price. So that question should not even arise. And then even if you look at the figure, 860 plus what, that 15% is almost 99, call it 100. So that's going to be about 960. Nigeria is still 0.62%, $0.6, $0.62, compared to Ghana, $1.37, compared to Cote d'Ivoire and Senegal, about $1.7. So we are far behind. We are half the Ghana and 1/3 of what they are charging in our neighboring country within the region. So we are still way down, and that is going to, and I'll tell you this, I'm not a soothsayer, but I will tell you this. If the government and the NNPC keep to the crude to Naira deal, which is guaranteed by PIA, is in the PIA, domestic crude obligation. And in fact, I'm going to recommend that government take a step further, because what we have here is at the demand end, but we do need to have similar measure at the supply end, at the upstream. Because what's the point if you have if the DCO, the domestic crude obligation, says you should supply, and then you are giving Dangote, who has 700,000 barrels a day, you are giving him only 70,000 with a promise that you will raise it to about 160,000 barrels a day, still far short of the capacity. So if you have that, then government should impose a tax of 5% on the non-compliant, non-DCO compliance. So government will earn more money. If you don't want to do what you're supposed to do, send that crude for local refinery, then I'm going to tax you. So government is going to get more money.
I think that's one of the fears that's being expressed, by some individuals in the country, that with this 15% import duty, that means more reliance on Dangote. Now, we know that Dangote even has to import crude. That means if anything happens to Dangote's supply, the country would be in a tight corner.
It's not. First of all, it's building another refinery anyway to take it to 1.4 million liters, another line.
Yes, to increase the production.
Two is that what is it producing at the moment? Based on what he's really producing 45 million liters a day. And what are you taking? We're only taking about 20 million liters. So he's forced to export another 25 million liters. So if our consumption is 45, sometimes they say 50, yeah, okay. We have enough to meet the local demand. So that question should not arise. But the other thing is that what really makes me unhappy is that people don't compare like to like. If you look at the big question others will ask is, are we violating bilateral, plurilateral, and multilateral trade agreements that govern this international trade? Are we violating them? The answer is no. If you look at ECOWAS, we are part of ECOWAS Union, Customs Union, and we have common external tariff, 5 bands, 0, 10, 20, 35, and 5%. We are not. We are bound by those tariffs, and if we are going to bring in a levy instrument, we are allowed to bring levy instrument to deal with issues like this, safeguard measures. So we are. So I shouldn't call it tariff. I should call it levy. Is that what it should be? It's levy, so that you can put it away. Then the second point is that you go to WTO. You have 4 clauses in WTO. One, it says safeguard measure. Their safeguard measure is to safeguard local industries against predatory pricing and all kinds of subsidies that could come. Then, because they will kill the target. We'll see what happened to our textile. Over 2 million jobs lost. You have textile graveyards in Kano, Kaduna, and Lagos. And that is because of frivolous imports that were not checked, they were not regulated. Then the other one is they have infant industry protection. Now, people may say, okay, well, why would you call Dangote infant industry? That we have refineries? No. That is a complex, as an integrated complex of its type that is infant. So it needs protection. Every country in the world protects their infant industry. So it's not an issue. Then you also have countervailing measures. Countervailing measures is where you have to invoke those because countries do what they do. They are dumping. Okay, we have anti-dumping. There are many of them, many clauses within the WTO. Anti-dumping is one of them. And let me explain to you. Dumping is not just dumping substandard goods, because we do know that substandard products. Because the 50 ppm is the ECOWAS standard of sulfur. Sometimes you give 150, 200, and it's killing the economy, it's killing the pollution, everything that can go wrong goes wrong with that. So then you have, apart from the substandard goods, you also have predatory pricing. So both of them are targeting your domestic local production capacity to decimate it. Now look, let me tell you one. In Africa, only Dangote and South Africa are producing refining now. Why? Then we have more, but they have been decimated because of the same argument that we have here. And what are we importing? Over $20 billion a year is spent on import of fuel products. Nigeria is even accounting for half of that, 10 billion. In 2020, we were spending 2 trillion on import of fuel. 2021, it rose to just over 4 trillion. 2022, it went to 7.5. It came down to 7.4. Now it jumped to 15 trillion in 2024. So what are we saying? What are we doing? If this must continue, government must earn money. And that's why the government must get this tax from the downstream demand side and get from the upstream. It says we have to, until people behave themselves. And let me tell you why it is important to have an upstream tax, 5%. If they refuse to comply with both the law and the directive of the president to supply to local capacity, then pay tax of 5% for that thing you want to export. That means $3.5 to $4 is going to be added to their $68. If they want to do that, go ahead and let me see who will buy your crude at $72. Do you understand what I mean? It's not fair. If you want to do that, then let's see who government gets the money. And then you lose your business. At least
government revenue will increase.
Absolutely. Government doesn't need to borrow anymore.
Exactly.
Government does not need to, and you don't need to put 5% petrol tax to citizens. Just leave that alone. Get your tax from the defaulters.
From the upstream.
And then use it to stop the fraud.
All right, Prof. We hope that they are listening.
Well, they have to, because this is most consequential. And look, our battle here is a battle of economic sovereignty. And you cannot restrain the local industries that want to put. Then they have said to the 30 refiners, come along, let's build a hub, a fuel distribution hub. And the market of $20 billion is there in Africa alone. Let's talk of. It's not even Africa that is buying his fuel. It's Saudi Aramco, it's America, it's Brazil. So the business is there. He wants them to come in. He said, come along, let's build a hub.
All right, Prof. Thank you so much for sharing that idea with us.
My pleasure.
We'll try and push that up even after now.
Thank you.
Okay, so now let's see other stories. We see startups in Africa. They've raised over $442 million in funding in the month of October. That's the second best month this year, behind July. 76% of the total, that's $334 million, was raised as equity, making it the best performing month in terms of equity funding in 2025. The two largest deals came from Spiro, which raised $100 million, the largest ever investment in an e-mobility startup on the continent. And then our own Money Points, they topped up their latest mega round with an extra $90 million. And of course, that's to the pride of both Africa and Nigeria. Another story, Standard Bank, which is Africa's largest bank by asset, is proud of its leading role as a banking and equity partner in Optasia's remarkable growth story, supporting the company from early-stage startup to its successful listing on the Johannesburg Stock Exchange. Standard Bank catalyzed debts and private capital through the critical growth stages of Optasia and has played a pivotal role in the initial public offering process, acting as a joint global coordinator, stabilization manager, and transaction sponsor. And now let's see what's happening with commodities. The good news is that you might be having a good chicken-filled Christmas, just maybe. At least that's what the findings of financial derivatives has told us. They say that they found that the price of chicken dropped 5.5%, and that's kind of unusual heading to the festive season. But let's get what Rosemary has to say more about this. Rosemary Hira is an analyst with financial derivatives company. Hi, Rosemary. Welcome to the program. This is good news. When was this research made, and do we think this can last up to Christmas?
Good afternoon, Inyi. Thank you for having me on the show. So this is kind of a month-on-month increase. So as at last month, the price of chicken was 5,500 for a kilo. And as it yesterday, when we called to find out, it was around 5,200 naira per kilo. So this is a 5.5% decline. And I will agree with you, it's kind of unusual given the fact that we're in the festive period. But this can be explained in simple terms and is basically because of cross elasticity of demand. So chicken and other proteins like fish and other meats are positive cross price substitutes rather. So it's just that if the price of fish and other meats or egg is increasing, you start to see the demand for chicken increase, and it's vice versa as well. If the price of chicken increases, you start to see consumers switching to cheaper protein sources, and that is what we've seen, because for the past couple of months the price of chicken has remained 5,500 for say 4 or 5 months now. It has remained stable. So this marginal decline just shows that a lot of consumers have been switching to cheaper alternatives because they are not looking for premiums. They are looking for more value for their money, basically. So in terms of it being sustainable, that's us having our dirty December with a lot of chicken to feast on. I would say it's not sustainable because we're going into the festive season. There's going to be an increase in demand for chicken, and that is going to put pressure on the price of chicken, and it's going to cause the price of chicken to reverse itself upwards.
So that means we can expect, I mean, just as you said earlier, consumers are tending towards the cheaper options. I mean, that means the demand for chicken might actually reduce if the price goes up again.
Well, in most cases, that would be true. But chicken often enjoys something that is called seasonal demand. So we are in the festive season, and in Nigeria, it's mostly rice and stew or jollof rice with chicken in most events that you go to. So you are going to see that play a role in the price of this commodity, especially during this period. That is November and going into December as well.
All right, Rosemary, thank you so much for sharing the findings of financial derivatives with us.
Thank you for having me on the show.
Let's head to the markets now, and we see that the NGX, that's Nigeria's stock market, sustains that negative sentiment as intraday to date, down 0.1%. South Africa is also in the negative 1.82%, and Egypt is positive, 0.75%, while Kenya is almost 1% in the red, or close to almost 1% in the red yesterday, Monday. Moving over to the Middle East, and we see also mostly negative from Dubai to Abu Dhabi to Saudi Arabia and Qatar. Major markets in the Middle East are red at intraday, shedding off some of the gains. Moving to the United States, we see that stock features were slightly lower, almost 0.5% though, so that's not slightly, that's more than slightly. The Dow is 0.48%. S&P, however, is on the green side, 0.12%, as well as NASDAQ, 0.46%. Plenty shares were very volatile in extended trading, even as the software company beat Wall Street estimate for the third quarter and gave strong guidance fueled by growth in artificial intelligence. Remember, that's leading the market. That's the NASDAQ. They're leading the market now because AI is getting a whole lot of attention and interest of investors. In Asia, markets traded mixed on Tuesday in the absence of any major triggers after two key Wall Street indexes rose overnight on tech optimism. So we see the Nikkei 1.74 in the red, Kospi even worse than that, 2.37. Hang Seng also is in the red, 0.63%. Look at other markets in Asia, and we see also red colors there, Shanghai and Nifty 50 of India, all of them in the red. I hope it's not a red color for European market, but Lars is here to confirm or refute that. Hi, Lars. Good afternoon.
Good afternoon, Ini. Yes, unfortunately, we do have a lot more red here for you. We are pretty much picking up the signals here from the Asian markets. So I want to say this is it with those gains for the new trading week that we talked about yesterday. On Monday, markets up, and now we're seeing an even steeper drop. Now, all in all, what does that give us? A sideways move, Ini, just as we've been seeing for a while now. In fact, looking at the second half of the year, we've seen markets up on 46 days and down on 44 days. So one analyst in Frankfurt pointed out that it couldn't be more clear that the market is not finding a direction. Behind the scenes, there's some talk about how the much stronger U.S. markets might be in an AI bubble. Europe now, as I said, following those leads out of Asia with more weakness. Later in the day, we'll be getting some more corporate numbers, but they have so far failed to move markets here in general as well.
So we hear that German president is coming to Africa. Unfortunately, he doesn't have Nigeria on his schedule. That's really sad, you know. But, I mean, what's the talk? What's it coming for? Is it this finding new partnership and trading partners?
Yeah, it is indeed unfortunately that he doesn't make a stop in Nigeria, of course, but there's a few other countries on his schedule. Maybe let's go through it one by one here. German president, his name is Frank-Walter Steinmeier. He started his trip this past weekend in Cairo. Now that, of course, was not entirely a business affair. He was there for the opening of the Grand Egyptian Museum, but he did also have, of course, business talks. And Egypt was a good place to start because the country is already kind of an example of what is possible in terms of economic partnerships between Germany and Africa. According to the Africa Focus Group at the Association for the German Economy, Egypt is very interesting for German companies. It's a large market that already sees many joint projects in realization. Among those are railroad and other infrastructure projects, but also some initiatives in digitalization. And then looking at the president's next stop, that's a lot closer than Ghana. That's also a market with already somewhat closer ties to Germany, not only with regards to their exports, which are, of course, cacao and fruit and natural rubber, but specifically they're also looking at Ghana as a market for the pharmaceuticals industry that is investing there heavily to make the country a hub for the production of vaccines, and Germany wants to be part of that.
Yeah, so it's obviously about developing new markets on the African continent.
Exactly. And, you know, while Egypt and Ghana, like I said, have established partnerships here, he's also looking at countries that don't, Angola being an example here, whereas, you know, Egypt and Ghana are also part of the G20 compact with Africa, of course. Angola is not yet in that, but the country wants in as well. And Germany sees Angola not only as an oil-rich country, but also with regard to future technologies as a partner in hydrogen production. There's also infrastructure projects and much more. And then, very interesting, of course, Angola has significant deposits of rare earth elements, and in the current environment, with China having that quasi-monopoly and banning exports, as we have often discussed here, that is something that Germany is desperately seeking, those rare earths, of course. Overall, a lot of German business people are traveling with President Steinmeier, and looking at his delegation, it seems pretty clear that economic cooperation is the main objective here of this trip, and that companies there want to really sign some deals.
Yeah, I wish he was coming to Nigeria, but thank you so much, Lars, for this info.
I'll make sure I let him know for next time.
Okay.
Thank you.
All right, now, just before we head out, we have to tell you what the market looks like for crypto. It's further down, even though it's higher than what I saw. I think yesterday it was about 107,000. So we see 104,000 Ethereum, 3,500, and a whole lot of red there. Some of the main stories there is Bitmine Immersion Technology. They've announced that they've combined crypto, cash, and investment holdings, and that has reached $13.7 billion, led by a significant increase in Ethereum reserves, now totaling 3.4 million. Others, Bitcoin bears extended the sell-side activity into European trading session today, and Kraken expands EU services with crypto collateralized features on Kraken Pro. And, well, that's it, the headlines for cryptocurrency. And that's it for Business Incorporated for today, Tuesday. We're back again tomorrow to take you around the world of business. But I'll see you tonight for the stock market report. I'm Ini John Mekwa. Take care.